Hello everyone and thank you for tuning into OptionGig. I come before you as usual to present you the summary of the week that just passed by. So today we're going to cover the summary of the week from 3rd of February to 7th of February. All right, let's get rolling now. First, let's talk about some market headlines. I cannot finish this discussion without talking about Tesla if we are talking about what happened in the market last week. Oh my god. Tesla stock rose 36% in just 2 days. I understand this company has a great potential. I understand it's gonna change the world. I understand it's a tech company. But 36% in just 2 days? That too after earnings? It already rose a lot after earnings, and beyond that, it again rose 36% in just 2 days. I was reminded of 2017. I've seen such parabolic rises in Bitcoin in 2017. Also, I've seen this in Tilray, and we have seen this story multiple times. And time and again, such instances teach us a lesson, and we'll see what the takeaways are from this one. And also, I'll talk about what contributed to this rise last week. But it was talk of the traders. What's happening with Tesla? Next, want to talk about jobs growth. The report came out from Labor Department on Friday. The jobs growth still continue to look strong. Even the ADP report for the private job growth, that also looked really strong. So that added very positive sentiment to the market, and market continued to chug higher, which means market hit all-time high once again. And when I say broad market hit all-time high, yeah, we saw that it was all-time high in S&P SPY 500. It was all-time high in tech sector QQQ. And I was amazed by how quickly the narrative can change in the markets. Last week, everyone was scared of coronavirus. This week, looks like some of those fear in the coronavirus have subsided. And great job growth, markets hit all-time high. Also, there's some work started in China around the trade deal. They started to remove some of the duties on US imports. And people kept on pumping money in equities, resulting in all-time high markets. So, with people putting money in equities and also the fear of coronavirus subsiding a bit, the need for a safe haven, which is US Treasury bond, was little less, which means the yield rose. And I think the yield rose the highest that we have seen since November 2019. And we have seen this multiple times, that when equities are at the all-time high, the treasuries or the bonds will go lower. That means the bond yields will go higher. Remember, the bond prices and the bond yield, they always move in opposite direction. So these were some market headlines, and now let's look at the summary of how various indexes did last week. Like I mentioned, many of them hit all-time high, so no surprises here that all the major indices, S&P 500, SPY ETF, Dow Jones Industrial Average, Diamond ETF, QQQ, IWM, which is small and medium segment, all rose last week. Let's do a quick run through. S&P 500 was up 2.66%. It opened at 323.35 and closed at 332.20. Diamond opened at 283.69 and closed at 291.19 and was up 2.58%. QQQ, the tech sector, was the strongest, and it was up almost 4%. It opened at 220.14, closed at 229.20. IWM opened at 161.60 and closed at 164.88, up almost 2%. So yeah, markets were all up. How did we do in this market? Personally, I closed total 33 trades. And let me also clarify, if you are new joining and seeing this for the first time, in this trade summary, the closed trades means all the trades that we have closed in the previous week. Some of those trades could have been rolled trades from a previous weeks, but if we close that rolled trade profitably in this week, it is considered as a profitable trades closed. And so total we closed 33 trades, out of which 24 were profitable and 9 were the losing trades. Now, some of the losing trades could be that I have rolled my trades from February expiration over to March expiration just to give myself more time to be right. And it might have happened that I had to close the February trade at a loss and open up a March trade and get a lot more credit. So I think if you really want to look at the complete series of the trades, I might end up in closing the trade profitably. But for the last week, since I closed the February expiration trade as loss and open up a March expiration trade, I am counting it as a losing trade. Eventually, it might end up as a winning trade. We'll see how it performs in March. So just a quick math, 24 profitable trades out of 33 means 73% winners. I'll take it. And I opened 42 new trades, and this also include the trades that I rolled from February to March expiration. So last week I did a lot of rolling. Some of the trades that are not yet profitable or started to challenge us, I started rolling it from February to March expiration, because we are getting closer and closer to Feb expiration date. And the closer we get to Feb expiration, there is a lot more gamma risk that is involved. So I wanted to take my trades off. If they are profitable, I close it. If they are not profitable, I'll either hedge it or I'll move it over to the next expiration period. So that is why you see a lot more trades open. Also, last week we got an opportunity to open a new trades for March expiry because it was an optimal time. March expiration was close to 45 days to expiry, which is what we have seen that it's the optimal time to open new trades. So it was a very active week in terms of opening and rolling the trades. All right, before we dig into the specific trades, let's talk about thought of the week. And the topic that I want to talk about is the rise and the fall of the great Tesla stock. So we have seen that Tesla actually rose all the way up to 960. Just a few weeks ago, it was trading around 300, 400, and it rose all the way to 960. There were two main reasons of it. One was that it was a short squeeze that happened in Tesla. And it was very evident that after going all the way up to 960, it came crashing down to 750, and I think it closed the week at 745. Nobody knows where it's going to go, but I think it was a roller coaster ride for Tesla shareholders last week. So one of the reasons, like I said, was a short squeeze. Now, if you want to know more about what a short squeeze is, please hop on over to my podcast and pick up the latest episode number 21, in which I've explained the complete process of short selling, short squeeze, and how it happens in the market. So, sorry. So one reason was short squeeze. The other reason was a mania created by a lot of retail traders. I had seen examples of it. For example, I saw a video on Twitter posted by a college graduate, not a college graduate, but as a student in college, and her idea was that college is boring. I can sit and make money in Tesla because it keeps going up and up. And she was showing the screenshots of where she bought and where she sold. There was also in Twitter, I noticed a Twitter post of an executive from a brokerage firm whose son came to the dinner table and told, "Dad, I want to buy Tesla." And then he asked, why? He says, "Tesla keep on making money." Also on the Robinhood platform, Tesla, excuse me. Also on the Robinhood platform, Tesla was one of the most active stocks bought by retail traders. So there was a whole mania around the created around Tesla stock by the retail traders also. Remember, Tesla has got a very less float, means the number of shares available in the market to trade is only 150 million. 150 million might sound a big number, but when we are talking about the number of shares being traded, it's a very small number. Apple has got 4 billion shares. Now, because of this small number, any mania or any short squeeze is generally, you will see the effect of it is compounded because the float available is so less. So that is why we saw the huge rise and a huge fall in Tesla shares last week. Again, as a trader and investor, it teaches us a great lesson that everything that you see is not the right thing. You may have to dig deeper and understand why it is happening in the market. All right, let's move on to our trades. First, let's talk about the top 3 profitable trades that I closed in the last week. The first one was my gamble trade on Tesla, because the moment I saw Tesla doing those insane runs going up and up, I thought, this is not real. It will come down. It was insane. So I did a trade which I generally don't do. I actually bought a put. Most of the times, if I'm bearish on a stock, I will either sell a call spread or I will sell a call. But Tesla is not a general stock. So it was a gamble trade I put in. I put in $5,000, gave myself a time till April to be right. And my assumption was, even if I lose this $5,000, it's okay. It will be a worthwhile ride on Tesla's stock for next 2-3 months. But surprise, surprise, in next 2 days, Tesla came back. Sanity prevailed. And I was able to exit this trade at 44% return on capital in just 2 days. So I had bought a put at 680 when the stock price was 746. It rose to 960, but then it came back down to 754 and my put was profitable, 44% return on capital. So I closed this. Second trade I want to talk about was when I bought the Tesla put at 680 for April expiry, I also bought a put. I also sold a put spread at 660 short put and I bought a 630 long put. So I sold a put spread in Tesla just to reduce my cost basis of owning that put. And when Tesla went to 900 plus, I actually rolled up my put, short put from 660 to 680, means I closed my 660 short put. So I took a profits off the table and I opened a 680 short put, We will see in the next slide what happened to the 680 short put. But for now, because I closed the 660 short put and I opened a 680 short put, I made money in this trade. Third trade I want to talk about is the closing of short put in Spotify, ticker symbol SPOT. I was bullish on Spotify, so I opened a $150 strike price short put on 15th of January. Stock was trading at $152.33. So it was nearest out of money short put. Now on 6th of February, almost 20 days later, stock is still trading at $152.50, very close to where it was when I opened the trade. But because of the passage of time, theta decay, the trade was profitable and we closed it at all $2.80. When I initially opened the trade, I had taken $6.10 as a premium, and then I got an opportunity. It got auto closed at $2.80, means close to $3.30 profit on this trade. Again, this is one reason why I am attracted to option trading. Even if the stock hasn't moved, like in this case, we still made money in trading Spotify. And let's move on to the next one. The trades closed in loss. So first one I want to talk about is the Tesla. Like I told, I had rolled my put from 660 to 680. So when I closed the complete Tesla trade, I not only closed my long put, but I also closed my short put. Now, when I closed this, Tesla came back at 754. So my short put was in loss. So I took a loss of $557 on this one. But if you recall, I had made $470 when I rolled the previous trade, and I had made more than $2,000 in my long put. So overall, Tesla position was profitable. Hence, I did not mind closing this trade at a loss. Second one I want to talk about is I had a Jade Lizard on Teledoc, ticker symbol TDOC, in which I have a call spread at 105 and 115. I own long shares of Teledoc, so I don't mind the shares being called, my call spread being breached, because it will mean that my long stock position is benefiting, even this option trade is losing. But anyway, I wanted to collect a little more premium, so I rolled this trade from February expiration to March expiration. Now, when I opened this trade, stock was as $95.75. After that, Teladoc has been rising, and on 5th of February, I rolled my call spread, which is 105, 115 call spread from February to March expiry. TDOC stock was trading at $107.50. So obviously my call spread was in the money, and I had to roll it, means close the current month trade at a loss and open a March trade at much higher credit. Again, we have to see what happens to the trade eventually, but for now I'm registering a loss for this particular February trade. May end up making a lot more money in March to compensate for this February trade. Similar thing, third one I want to talk about is Home Depot. Same story like that of Teladoc. I had 235 short call. It's a covered call on Home Depot. I own 100 shares of Home Depot in my account, and I had a $235 strike price covered call on Home Depot. Home Depot had been rising and it breached my short strike. It reached $236.40. So on 5th of February, I rolled it out to March, closed the February trade at a loss of $335, but I opened March trade at much higher premium. Again, I'm just giving myself a little more time to be right on this one, But eventually, if it stays higher and my share gets called away, it's fine. My cost basis is much lesser, so I'll make a lot more money on the share side. But I'm just trying to collect a little more premium. All right, new trades that we open. I talked about Home Depot, that I took a loss of $335. Here is the one where I rolled in my not just the call, but I also rolled out my put side, and I have collected totally $11.25 as a premium. So this was a covered strangle which I completely rolled from February to March expiry. Now if I account for the loss that I had to take in February expiration trade, the total premium collected on this trade is still $8.72. So now I have a strangle with short strikes at 225 on the put side, 235 on the call side. Total premium collected is $8.72. So my break evens are much wider. Second trade I want to talk about is I rolled out again a covered call on Grubhub, ticker symbol GRUB, from February to March expiration, and I collected $10.82 as a premium. Now this is a deep in the money covered call because Grubhub is trading approximately at $55, and I hold 100 shares of Grubhub. I am just trying to collect more and more premium so that I do not have a seller's remorse that I made a little less than what I could have made. So I just rolled out my trade from February to March expiration, and since I was able to collect net credit, I think I did this trade. But if I reach a situation where I'm not able to collect a credit, then I let the shares called away at whatever profit I'm making right now. Third trade that I want to talk about is a custom trade that I did in Luckin Coffee. Now I've been bullish on this stock, but I was looking for a better price point to enter into this stock. So, and I got an opportunity on 4th of February. So we did a custom trade. What I did was I sold two short puts, and I also sold a call spread. Stock was trading at $36.24, and I sold nearest out of money put, which is a $35 strike price. I sold two puts of it, but I also wanted to reduce little bit of my delta and collect a little more premium. So I also sold a far away call spread at $47 short call and $50 long call. Now let's analyze this trade. If stock goes down, I collected $10.63 as a premium. Let's say approximately $11 as a premium. Now if this stock falls, and I will be assigned 200 shares of Luckin because I sold two puts, and I collected $11 as a premium, means per 100 shares I've collected $5.50 as a premium. So my strike price is 35. If I get assigned the shares, my cost basis will be $5.50 less than 35, which is approximately $29.50. I think $29.50 is a good entry point for Luckin Coffee. Now let's take the other side. Stock doesn't go down, but it just blows through my call spread. If it blows through my call spread, I'm still okay. I'll still exit this trade at $800 profit. Reason, I collected approximately $11 as a premium, and my call spread, I have only one contract, and the width of that call spread is $3. Means if it blows through my call spread, I'll have to pay $300 to close that call spread, but I collected $1,100, so I'll still be profitable by $800. So there is no risk on the upside. The best case for me is that the Luckin Coffee stays right between 35 and 47. In that case, that's my max profit situation. We'll see how Luckin Coffee behaves. I will close it when I'm making maybe approximately $500, I'll try to close the trade and move on from this. So that's all. I think we covered everything that I wanted to cover in this weekly update. If you like the content of this weekly update, please let me know either by posting your comments on YouTube, or if you are hearing it on a podcast, please go and rate this podcast at a 5-star rating on your podcast platform, because that is the only way in which we can have other people find this podcast also. And I think that's the only remuneration for me and motivation for me to keep doing this content week and week. All right, thank you very much. And as always, if you have any further questions either on any of these positions or some of the positions that you may have in your account, send a note to me at optiongig@gmail.com, and I'll be very happy to chat with you. Thank you very much. Goodbye. Happy trading. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.